Hi, this is Zach here with the Bulletin Board Heroes here at Zach's Traders Cafe for Friday, the 19th of April. Starting off with the FTSE 100, which failed at old support there, 78.80 yesterday. In fact, the last 3 days we've failed in that zone. Not a good look. The other negative is that this is a potential rising wedge from December. The market's bounced off the floor of the wedge 3 times, so it looks like it's seen it. Our initial downside here was the 50-day line around 77.70, but if that wedge does trigger, let's say, then we could be down to the 200-day moving average area at 75.90 soon as the end of this month. The other negative, which is quite a negative, is the way that the RSI, bit of a RSI 50 failure. So the RSI rallying to 50 and then coming down from there, which tends to be a leading indicator on the downside. Moving along to the DAX, and here we've got a situation where we've broken our 50-day moving average there. That was around 17,700. Below that, there is now the risk of filling the gap down there from February down towards 17,200 over the next couple of weeks or by the end of the month. And at this stage, only a proper break of that April resistance line there, 17,900, really undoing the negative setup we have had. The other point to note is that last week we had an RSI 50 failure there for the DAX, and actually it's supposed to be failed again below that RSI, so not looking great. The situation could be rescued though with a decent end of day close above the 17,700 area, which obviously at the moment we have, but looks like it's a bit of a struggle near that 50-day moving average. Moving on to the Dow, and here overnight shenanigans geopolitically were not in the mix. Here you can see though that we've still got the risk of heading back down to 2024 support. In fact, the December support there as well, right, just above 37,000, and I think one would have to fear that the longer we stay below 38,000, that February neckline support for this market. If we do break above 38,000, then the next target up is the 50-day line, 38,800, but it has to be said, that feels like it is a long way away at the moment. Moving on to Bitcoin, which had a bit of a rug pull again overnight. I think this is the 3rd or 4th time that we've had a sub 60,000 move. We were expecting a slight move towards 57,000, 58,000 as a worst case scenario, just taking out the longs with their stop losses below the 60,000 level. Current situation though is that we above 60,000, looking for the 50-day line there at 67,000. But we need to break 68,000 and that March resistance line to give us a shot at the top of the range. Obviously, the halving imminent on that market, and maybe that's the reason why we bounced so well so far. Moving on to gold, and here obviously feeling the benefit of the overnight geopolitics and rising trend channel there. We were hoping this market would bounce from above 2360, which it's done over the last couple of days. Above that, looking for the top of that trend channel from February at 2510, which hopefully we could get by the end of next month, although obviously you don't really want something nasty to happen in terms of the geopolitics in order to get there. Moving along to the stocks, and starting off with alien metals. Here you can see that we've basically been nudging our initial target there, that top of that broadening triangle from the end of December. That level there around 0.25. Above that, we would be looking for a fresh leg to the upside, perhaps up towards the 0.37 level by the end of next month. But the key here is holding above the 200-day moving average at 0.21. Rising 50-day line, making this look good and making it look like a mid-move consolidation ahead of a move up into the 30s or the mid-30s for that. Another stock which has hit its target, at least the initial one, is Andrada. In fact, the initial target here, right at the top of a rising trend channel base, 5.2 pence. Above that, looking for 6.5 pence by the end of next month. That October resistance line projection, the upper parallel of the rising trend channel base. So by the end of May, 6.6 pence rather. And hopefully we'll get a pretty quick end of day close through the 200-day moving average. We haven't been above that properly since the beginning of November. Moving on to Block Energy, which I haven't covered or talked to. I haven't talked to the company for a long time either. There may be a reason for that. The current situation is that we've got this broadening triangle there from October 22. Top of the triangle there as high as 2.25 pence, and we're looking for that by the end of next month, while we remain above the initial 2024 resistance around 1.25. So rather simple there. Above 1.25, looking for 2.25 on block energy, and we've got the 50 and 200-day moving averages both rising. That's the run up to a golden cross, hopefully by the end of this month, and the run up to golden crosses tends to be the strongest part in the cycle. We were looking at Cornish metals on weekend markets recorded earlier on, and interesting that the market cap and the cash at the company seems to be almost the same. In fact, there's slightly more cash, around 55.5 million versus the market cap, and which is 53. So that is interesting. Current view is that an end of week close or a break of the 200-day line at 10.8 pence should be enough to get the shares up to 16 pence by the end of next month, cash or no cash. Maybe there's some other story there in the mix causing the recovery. Moving on to Emmerson, we're waiting for the Moroccans to come up with the goods in terms of permits, etc., for the potash company. But in the meantime, 3.5 pence on top of that rising trend channel base from August, looking for that by the end of next month or much sooner, while we're above the 200-day moving average at 2 pence. We're really lucky we'll stay above that 50-day line. Next up is GS Technologies, and here rising trend channel which has been in place since June last year, and it looks as though we're just starting to bounce off that. We've got rising 50 and 200-day moving averages there, and above 1.2 pence, rather above recent support at 1.15 pence. We're looking for 2 pence as soon as the end of next month, because it may presumably, though, a rally like we saw in November may be a little bit too much to ask for. Goldplat is next, and here you can see that it looks like we're going to a consolidation. We've got a rising 50 and 200-day line, so hoping that this is a mid-move consolidation. Ideally, we hit at the top of that broadening triangle from the spring of last year, 10.6 pence by the end of next month, and stay on the right side of recent support at 7 pence. GreenRoc is next, and here also looking quite encouraging at the moment. We had a bear trap gap reversal, so gapping off the lows after a new low, and now we've got a rising 50-day line. Just need to break that line of resistance there from November. That's around 2.25 pence above that, looking for 3 pence by the end of next month. Ideally, we stay on the right side of 2 pence in the meantime. Huddled is next, and here a gap higher last week for the shares through the 50-day moving average. We've got the 50 and 200-day lines now starting to rise, if they're not already rising already, and the top of that broadening triangle from December at 3.6 pence should be on tap by the end of next month, while we're above the 200-day moving average. I was looking at Novacyt over the week, or during the week, earlier in the week, and here it's been looking good basically since the 50p area around the early part of this month, gapped up higher yesterday, and the view at the moment is above the 200-day moving average at 56, looking for up to 78 by the end of this month. If we're lucky, we'll stay above the floor of that gap there at 61, ahead of 78, and actually, anyway, expecting much more than that. It looks like a very strong setup there. On to Predator, which seems to have a Teflon characteristic here, rising trend channel here. We had the horrible gap down back in February, but clinging on to the 50-day line around 9.4 pence, and the longer that we stay above that, the greater the chance of the shares filling the gap up to 12.75 pence by the end of next month within that rising trend channel. Haven't looked at Poolbeg for a while, and here looks as though the shares ready to start a new leg within that rising trend channel from September. The top of the channel there heading for as high as 15 pence. And we're looking for that by the end of next month. Finally, hoping to see the stock deliver the goods for the bulls in a big way. On to a stock which has already delivered the goods for the bulls, Tungsten West, and here got this V-shaped formation. We were in the run up to a golden cross. The view at the moment is the longer we stay above 4 pence, the greater the chance of a move up to a June resistance line rejection from last year, as high as 9 pence. By the end of the month, but obviously we'd like to see the shares have a decent end of day close and weekly close today. Finishing off with Windar, and here the picture that of a break through the rising 200-day line. We've already got a rising 50-day moving average, and we're looking for progress within a rising trend channel from October, the top of the channel there, as high as 57 pence, which we're looking for by the end of next month, while we remain above the 50-day line at 34 pence. That's it for me today. More updates over the weekend.